My name is Chris Kendall. I am the Executive Director of the Cincinnati Insurance Board, Greater Cincinnati Insurance Board, because we do handle the tri-state area, Ohio, Indiana, and Kentucky. We service those three areas. Give you a little bit of my background. I have been in the insurance industry now for 38 years. I came in 1986 with the Cincinnati Insurance Company, Cincinnati Financial Corporation, based in Fairfield, Ohio. When I started in 1986, trained as an underwriter, moved into management positions, did a lot of system integration, converting systems to digital when we were paper-based back in those days, policy administration systems, a lot of HR work, that kind of thing, and quite a bit of insurance education. I've taught, I've designed courses, that sort of thing. But in my Cincinnati financial days, growing up as an underwriter, and when I got into management positions, we worked on a lot of the approaches we wanted to take as an insurance company when different issues would arise in our industry. Something I'm sure you're all familiar with on a property standpoint is EIFS, right? Exterior insulation finishing systems. Insurance companies don't like them. They feel like that system is flawed, that it can't be installed correctly, that it leads to water intrusion, particularly in the southern states where you have a lot of wind-driven rain and it's warm, moist air, and it tends to be insidious, right? Water is one of our biggest enemies in terms of claims adjusting and insurance coverage. So I worked on how do we approach that? What do we do? Do we provide coverage? Do we exclude it? My point is I've worked on a lot of different underwriting issues from the company side, and I spent some time on the agency side as well. So I have that sort of background. It was really an honor for me to step into this role because we are an organization that has been around for 185 years. In May of this year, it will be our 186th birthday. So we're very proud of that legacy, and we're very protective of the organization and making sure that we would sustain this incredible run that we've had. So I feel very honored to run that. And be the only employer. We're a small organization, we're nonprofit, we're service oriented, and I'll talk about, my main purpose of my talk is to talk about what we do, how we do it, how we serve the tri-state community in terms of the insurance community. And I'm going to talk a little bit about some property roofing issues that I think you might find interesting, some of which you're probably well aware of, but kind of give you a state of the state on how insurance companies are approaching roof coverage. They don't like them, right? They don't like to insure older buildings, they don't like to insure older roofs, and they've got no shortages of endorsements to limit coverage. And I'll talk a little bit about that toward the end. This is another question, labor depreciation. So there was a carrier that sent a note out to all agents in the state of Ohio, I won't mention the carrier, and they were putting their agents on notice that going forward for roof adjustments, we're going to not only depreciate the roof if it's been valued on an ACV basis per the policy terms and conditions, but now we're going to depreciate labor. If there's an attorney or an adjuster here that can explain to me how you depreciate labor and how labor depreciates over time, I'd sure like to know that explanation because it makes no sense to me. In fact, some states, because carriers are starting to try to depreciate labor, some states have come out and had a moratorium against it, California and some others. Ohio allows it, but you have to have it stipulated in the policy. So when this agent called me, that's the first thing I asked them. So I said, well, it doesn't make sense to me, but you gotta read the full policy, RTFP. Some people substitute another word for full policy, but you need to read the full policy. And if that policy does not have a provision that says that your depreciation, assuming it's legal in that state, it is legal in Ohio, you can't do it. It's got to be, for a standard company, it's got to be a filed form. You're not standard companies don't operate in a non-admitted market. They have to file their forms. They have to be approved by the state. So that was my response to that. But we are starting to see that labor depreciation issue, which is quite mystifying to me. You're here at a regulatory conference, you have a need for continuing education. So we're there. Tom is very experienced. I've got 38 years in the industry. So if any of you out there are interested in having us come in to do that sort of seminar for you, we'd be happy to do that. Just give me a call, and I've got a card, and I'll be at lunch as well as the reception tonight. So track me down. I'd be happy to talk to you about that.